Hi guys, welcome to our channel, The Mechanics of Making Money. We've got something thrilling lined up for you today. We're going to take a deep dive into one of the most notorious scams in financial history. You've probably heard of it as it inspired the Hollywood blockbuster, The Wolf of Wall Street. Yes, we're talking about Jordan Belfort's infamous penny stock scam. But hold your horses, we're not going to spill the beans just yet. Instead, we'll give you a sneak peek into the fascinating world of Wall Street, where dreams can turn into fortunes, and fortunes can evaporate into thin air. We'll unpack the mechanics of the scam, the nitty-gritty of penny stocks, the art of cold calling, and the infamous pump and dump strategy, all masterminded by Belfort. So buckle up as we delve into the intriguing world of penny stocks and cold calling, all orchestrated by none other than Jordan Belfort. First off, who is Jordan Belfort? You may know him as the infamous Wolf of Wall Street. Born in the Bronx, New York, Belfort entered the stock market world in his early 20s and quickly made a name for himself. He founded Stratton Oakmont, a brokerage house that employed over 1,000 stockbrokers and was involved in stock issues totaling over $1 billion. But Belfort's rise to the top wasn't without controversy. His aggressive, high-pressure sales tactics and unethical business practices eventually caught the attention of the authorities. He was indicted in 1998 for securities fraud and money laundering, leading to his eventual downfall. Belfort spent nearly 2 years in prison and was ordered to pay restitution of over $100 million to his victims. Now that we know the man behind the scam, let's dive into the mechanics of his infamous scheme. To understand the Wolf of Wall Street scam, we first need to understand what penny stocks are. These are shares of small public companies that trade for less than $5 each. Due to their low cost, penny stocks can be bought in large quantities, which means they have the potential for substantial returns if the company's value increases. However, their low price also makes them incredibly volatile, and therefore risky. This risk is further amplified by the fact that penny stocks are not traded on major exchanges, which means they're not subject to the same stringent regulations. Now here's where things get interesting. Because of their volatility and lack of oversight, penny stocks are prime targets for manipulation. Traders can artificially inflate the price of a penny stock, sell off their shares for a profit, and leave unsuspecting investors holding the bag. With a basic understanding of penny stocks, we can now move on to the next step of the scam: cold calling. Cold calling. It sounds harmless, right? Well, not in the hands of Jordan Belfort. Belfort's cold calling strategy was a key element in his grand scheme. Cold calling, for those who might not know, is a sales technique where a salesperson contacts individuals who have not previously expressed interest in the offered products or services. It's like fishing in the dark, hoping to catch a big one. In Belfort's case, he would have his brokers cold call wealthy businessmen and persuade them to invest in these penny stocks. These were not just any stocks, but stocks of companies that were often struggling or even non-existent. The brokers, who were trained by Belfort himself, would create an aura of exclusivity around these stocks, claiming that they were privy to insider information. Now here's where the pump and dump strategy comes into play. Pumping refers to the artificial inflation of a stock's price, often through misleading or outright false statements. Belfort and his brokers would pump the price of these penny stocks by selling them to their clients. The more clients they could convince to buy, the higher the stock's price would rise. Once the stock price was sufficiently inflated, Belfort would dump his shares. This is the dump in pump and dump. He'd sell all his shares at this inflated price, making a hefty profit. The sudden selling of shares would cause the stock price to plummet, leaving those who had bought the stock at the inflated price with significant losses. Belfort's pump and dump scheme was a well-oiled machine, operating under the guise of a legitimate brokerage firm. It was a game of manipulation and deceit, leading to the financial ruin of many investors. And just like that, Belfort and his brokers were making a fortune. But at what cost? So how did Belfort and his brokers profit from this scheme? Well, it's simple, but deviously so. They made their money from commissions. Every time they convinced an investor to buy these penny stocks, they earned a commission on the transaction. But here's where it gets really interesting. After pumping up the value of these stocks through their aggressive sales tactics, they would then dump their own shares, causing the value to plummet. This is what we call dumping shares. By the time the investors realized what was happening, it was too late. Their investments were worth a fraction of what they had initially paid. The brokers, however, had already cashed in. They had taken their commissions and sold their own shares at the inflated prices. The result? Massive losses for the investors and huge gains for Belfort and his team. And that, folks, is the Wolf of Wall Street scam in a nutshell. And there you have it, the mechanics of the infamous Wolf of Wall Street scam. We've journeyed through the world of penny stocks, cold calling, and the notorious pump and dump scheme. We've traversed the murky waters of brokers' profits and the perils of share dumping, all in the spirit of understanding the machinations that allowed Jordan Belfort to orchestrate one of the most infamous financial scams in history. But remember, knowledge is power. By understanding these tactics, you can better protect yourself from falling prey to such schemes. Moreover, you can use this knowledge to invest wisely. There are legitimate ways to make a profit in the stock market, and with careful research and prudent decision-making, you too can carve out a successful financial future. Thanks for watching. Please remember to like, subscribe, and share so you see our future videos pop up on your newsfeed. Stay safe out there, guys.